Hello, everyone. This is the Card Game Podcast with your host, Chris Corral, which is me. I don't know why I said that, but rolling with it. This is episode 2, and I'm doing an audio only podcast today because I'm going to be testing how to distribute the podcast a little bit more efficiently with audio. And here it goes. So today's episode is about buying your first car. And buying your first car can be a little bit scary. You might have an idea of what you wanted. You have some idea of the math that goes into calculating your monthly payment. You're scared of getting ripped off by the dealer. You hear all these horror stories of buying a car. But let me tell you, from the perspective of a dealer or me, a salesperson, a first time buyer presents an opportunity to have a great experience buying your first car. An educated, informed consumer, in my opinion, is going to be a lot happier with their car purchase and come see me down the road a few years later. Now, there is a lot of bad actors out there. I'm not going to lie. This is a for-profit business, buying a car, selling a car. So here are some tips that are going to help you get the best deal possible as a first-time buyer. And I'm going to explain some of the reasons why these are some tips that I give. Now, I've been in the car industry over 4 years, and you see these time and time and again. Number one, for some reason, first-time buyers uh, typically will not have any credit history. So if you're listening to this podcast now and you're planning to buy a car in the future, get some credit cards under your name. You're going to have history. So you just turned 18. You're legally able to purchase a car. You probably haven't had a credit card for a year because you just turned 18. But as soon as you turn 18, please get a credit card, something that will have credit to your name. Now, it's not necessary. I want to be clear. It's not necessary to have credit cards or other credit things to build your credit when buying a car, because buying a car is a different type of credit. There's car credit, just like there is credit in buying homes, credit in credit cards. But if you're 20 years old, 21 years old, and you have no credit history at all, it is a lot more difficult in those cases because first, you probably messed up your credit by just not having the history. But now you have employment history, which may or may not be good. Could be spotty. You might have changed jobs a couple times. When you first turn 18, the manufacturers out there usually have first-time buyers programs. I'm not going to get into those, but they all have their own requirements. Typically, they require you to have a good standing with the school you graduated from, proof that you're working, and spotless credit. So, number one, we call it a ghost. If you're a ghost, you have no credit history, it's going to be a little bit tough. And that's why you need a cosigner. So a cosigner is someone who has credit history that is going on the loan with you to get approved for a car. Now, a cosigner, in the best case scenario, has financed multiple cars before. Their credit's over 700, no bad marks on their credit. And even then, with a cosigner, you might not get the best rate that you were hoping for, but you will definitely get a better rate compared to just going at it by yourself. The cosigner makes it a lot easier. To the bank, it looks less risky because you have someone that can pay for the car if you decide to stop paying. Now, obviously, if you get a cosigner, you don't want to do that to them. Keep paying your car note and just be a good person. If someone's willing to co-sign with you, that is a very serious financial responsibility. It affects both of your credit. If one person stops paying, then both of you are affected. So co-signer, I always recommend with my first-time buyers. I will typically tiptoe around the subject until I get an understanding of what you are looking for. Because me as a salesperson, I'm asking you, how do you want to purchase this car? You might not have a cosigner, or you don't want a cosigner to be with you on the loan, but I'm just recommending that's something that makes it a little easier. Number two, your money down. So money down is kind of a controversial subject amongst a lot of people, specifically people that are not very experienced in buying vehicles. But having money down will lower your finance amount. So if your car is $20,000 and your down payment is $5,000, you're lowering the balance of what you're financing by $5,000. And to the bank, that is a good thing. They want to see that you're putting money into the deal, you're responsible, you're lowering what you're financing. Um, there is another calculation that you can refer to, but it's not something that is publicly known what these underwriters are looking for, but it's called debt to income ratio. So if you make $3,000 a month serving at Buffalo Wild Wings and your car payment is more than $1,000, let's just call it 1,000 to make the math easy. That means a third of your income, right? 3,000, your car payment's 1,000. A third of your income is going towards your car payment. Now that's an extreme example, but you're going to want to lower that ratio as much as possible. And in addition to having money down, you want to pick a car that's less expensive relative to your income. So if you're rich and you're making 100,000 to $1 million a year or more, right? And you're going to go shopping for cars around 40 to $50,000 your first car, there's a possibility that the bank might just swing it. Maybe. It depends on a lot of other factors. But most of my first time buyers, you're buying your first car as you become an adult, you're making maybe 40 or $50,000 a year. So if you have a car payment that's a third of your income or more, that's a no-go. I recommend like specifically first time buyers that want to build credit and eventually graduate to a more expensive car. And this advice goes the same for people making a lot of money already. Because I've had some cases of kids that go to school, they're highly educated, they get a well paying job right out of college. I don't recommend you jump right into a 40 or $50,000 car as your first car either. You want to build a little bit of credit with a lender on a cheaper car so you could jump into something else later down the road. But again, this is just my advice. You could do whatever you want. Pick a car $20,000 or less because it's a lot easier to get approved on those cars. Now, you only have to keep it a year or two and you can buy a Ferrari if you want to, whatever. Just kidding. No, you can't buy a Ferrari, but you can graduate into a more expensive car and it'll be a lot easier. You don't have to prove your income and do all kinds of things to have the bank believe that you're actually successful. You just show, well, I paid off a $20,000 car. I've been paying a $20,000 car payment. Now I want to go into a $60,000 car. And then from there, you go to a $100,000 car. And by the way, if you never bought an expensive car before, right? Let's just say you show up to the dealer and you want to buy a Lamborghini. If they seen you never finance anything other than Hyundai or a Honda, Toyota, $20,000-$30,000 cars, they're not going to lend you that money. You'd have to get really creative on your financing. So I digress. So let's review here. We're talking about getting approved, first time buying a car. You're going to want money down. Whatever money you can put, it's going to help. It's not a requirement though. You could put zero down and still get approved, but it's going to be a little bit more difficult depending on the car. You're going to want a cosigner if you can. That'll just smooth out the whole application process. A lot more likely you get approved and you're going to get a better interest rate. And then pick a car, typically $20,000 or less. It's going to be a plus if it's maybe a Japanese car or something that holds its value really well, like Honda, Toyotas, Subarus, whatever, because it's less risky for the bank. Those cars don't depreciate as hard and the math for them looks better. Okay. The last thing I want to say is work with a big dealer. So a lot of times I hear my clients come in and they have horror stories of they went to a mom and pop shop on the corner, they got a good deal. A lot of these buyers are not educated in what bigger dealer groups can do. Now, there is value in those dealerships as well, but if you're not an experienced car buyer, just know that those types of small lots might have relationships with lenders that would get people approved that would normally not get approved, except the terms are going to be not favorable. I've seen interest rates anywhere from 10, 20, 30% of my customers like trading in. Now we can do that too. A big dealer can give you a high interest rate on a miracle approval. This is what we call it. A miracle happened when you get approved because you weren't the ideal buyer for this car, but we got you approved with the bank. So when you work with a big dealer, you actually have more options, especially if your salesperson is more educated in your specific situation. They can put the deal together and recommend certain vehicles that, hey, look, if you're looking for a car, this Honda with 60,000 miles, is it going to be a great deal for you? Let's go drive it. Let's see what you think. Then let's submit your application. This is what I recommend you put down, et cetera, et cetera. So someone like me that knows about these types of situations, that's what I would say, for example, if you're a first-time buyer buying your first car. Now, there is exceptions to all of these rules, and I just want to be very clear that you might listen to this and go get lucky and you get approved on whatever car you want. That's great. I'm just saying, in general, these rules will help you on your journey of buying your first car. I also would recommend, too, that you have a clear idea of what cars you're interested in, because you might show up to the dealer and you swear this is the only car you want, but when you find out you can't get approved on it, now you feel upset because you can't get the car you want. So don't force yourself into a car that is going to have a super high payment, high interest, have a couple plan Bs. I sell BMWs myself, but every now and then I got to switch a customer to a used Honda, a used Toyota, whatever, because they just need a car. And I set the expectation early on that, hey, I'm going to try my best to get you the car you want, but you shopping for your first car, you have no credit history, et cetera, et cetera. Let's take a look at some other cars while I submit this. And if you do like any of these, we can always look at them in case we don't get approved on this one. All right. Well, that is pretty much all the tips I have for today. If I missed anything, sorry, I didn't write it in my bullet points, but I thought it was pretty thorough. If you have questions and you're buying your first car, please send me a message on Instagram at The Real Chris Corral on Instagram, The Real Chris Corral. And I'd be happy to answer any of your questions. You guys have a great day. I'll see you for the next one.